Welcome back to the Deep Dive. We're here at WeWire, bringing you the weekly Stay Wired recap. I'm John.
And I'm Wendy.
And we're ready to plunge into some truly fascinating material you've shared with us. We're tackling a really crucial topic today, one that kind of turns conventional wisdom on its head. The notion that unbanked Africans lack financial capacity is fundamentally misguided.
It really is.
Our sources, like the World Bank's Global fintechs 2021 survey, they show that over 80 million unbanked adults in sub-Saharan Africa earn cash, from agriculture, trade, or remittances.
Right, real economic activity.
Exactly. And this fuels powerful systems like Nigeria's esusu, Kenya's chamas, and Ghana's susu.
These aren't just small things either.
No, not at all. These are sophisticated rotating savings and credit associations. They let participants pool funds for, business ventures, education, emergencies. They contribute significantly to local economies.
And the scale is huge.
It is. South Africa's stokvels, for instance, manage over $7 billion annually. That's according to a 2023 Nedbank report.
$7 billion. Just think about that.
So our mission today is to really dig into these reports, the financial news, the think tank analyses you provided. We want to help you truly grasp the real, often unseen, financial power at play within Africa's informal economies.
What's truly fascinating here, and what this comprehensive stack of sources helps us uncover, is how powerfully they challenge that common misconception. We aren't just sifting through statistics, are we? We're really uncovering these vibrant, deeply trust-based systems that underpin a significant, often underestimated portion of the African economy.
Yeah.
And for this deep dive, we've looked at a really rich mix of information, everything from foundational World Bank reports, IMF regional economic outlooks, to detailed studies from the African Development Bank, specific financial insights like those from Nedbank you mentioned, real-time data from Bloomberg, and a whole range of other crucial financial news and expert analyses. It all feeds into the essential insights we bring you in our weekly Stay Wired report.
Okay, let's genuinely unpack this misconception right away, because it's just so pervasive, isn't it?
It really is.
For so long, the term unbanked has been, kind of a misnomer, too often just equated with poor or financially excluded.
Like they have no money or agency.
Exactly. Conjures this image of people without financial means. But the documents you sent us, from every angle, they paint a completely different, much more dynamic picture.
Definitely.
We're not talking about some fringe activity here. We're talking about an entire sophisticated economic engine. These sources clearly highlight that Africa's unbanked population isn't just getting by.
No.
They're actively driving a massive, vibrant, $20 billion informal credit economy.
$20 billion. That's not just a statistic. It's an economic force bigger than the GDP of many smaller nations.
Absolutely.
So if we connect this to the bigger picture, it really means recognizing this vast, largely untapped market. These are creditworthy individuals operating with immense financial capacity just outside traditional banks.
Right. It's a different system.
Exactly. And the reports consistently show these informal systems aren't born out of, a lack of financial discipline. They're powered by deep community trust, mutual support, incredible resilience.
It's really about ingenuity, isn't it?
It is. It's a testament to human ingenuity facing formal barriers rather than just being a symptom of poverty.
And it's not marginal economically either.
Not at all. Consider this. Sub-Saharan Africa's GDP growth is projected at a pretty robust 3.5% in 2025 by the World Bank. This isn't some stagnant economy we're talking about.
Right.
In fact, the IMF specifically notes that these informal sectors account for a staggering 40% of GDP in major economies like Nigeria and Kenya.
40%, wow.
Yeah, 40%. That's undeniable economic influence. It's a huge chunk of the entire economic output.
So for you, our listener, whether you're a business leader, an investor, or just someone trying to understand global economics,
the relevance is clear, right? You have to recognize this substantial spending power and economic activity. You need to design products and services that actually align with these existing, powerful, trust-based systems.
Yeah. Ignoring it just means ignoring a massive market.
Precisely.
That 40% of GDP figure is, it's staggering. It completely shatters any idea that unbanked means financially inactive.
Totally.
But the real genius, I think, this intricate dance of trust and necessity, it really emerges when we look at how this $20 billion economy actually functions, on the ground. It's not just one single system, is it? It's more like a constellation of diverse, localized solutions tailored to very specific community needs.
Exactly. Adaptable.
So what are some of these key systems the sources highlight? How do they work their magic, helping financial activity outside the banks?
Well, we have several really excellent examples from the sources. They highlight the incredible adaptability and cultural embeddedness of these systems.
Okay.
So in Nigeria, you find esusu. At its heart, it involves regular contributions, often weekly or monthly, from members into a shared pot.
Right, pooling money.
Yeah. And this pot then becomes accessible to members for loans or investments, usually on a rotating basis. So imagine a small business owner needing capital, can't get a bank loan. Their esusu group lets them get a lump sum when it's their turn. It's effectively an interest-free loan from their community. Really powerful for collective saving and credit.
Makes sense.
Then you've got South Africa's stokvels. These are remarkably versatile. They aren't just for emergencies.
Oh.
No, they support all sorts of goals, managing burial expenses, financing property purchases, even large-scale investments. That 2023 Nedbank report you mentioned, it shows stokvels collectively manage over $7 billion annually.
$7 billion again. That's serious money.
It's not small change.
Yeah.
It really speaks to their organizational power and the financial trust they command. Think of them as like hyper-local, community-driven financial cooperatives.
Okay, interesting comparison.
Then moving over to Senegal, the tontines are particularly impactful, especially, it seems, for women-led enterprises. A 2024 African Development Bank study found that an impressive 60% of participants are female. This highlights their role in empowering economic activity right at the grassroots.
Wow, 60%.
Yeah. Often, these groups pool funds specifically for collective entrepreneurship, letting women launch or expand small businesses that might, never get formal financing otherwise. It's collective power for individual progress.
That's fantastic.
And finally, in Kenya, chamas are really prominent. What's particularly interesting here is how these groups have started embracing technology.
Tech integration.
Right. Many are now digitized via mobile apps, which helps facilitate group investments, especially in things like real estate. This blend of traditional trust with modern tech is, well, it's fascinating.
It really is.
And what's absolutely crucial to understand about all these systems, and the sources consistently point this out, is their incredible resilience.
Resilience despite challenges.
Exactly. Despite formidable global challenges like, say, reduced aid flows, which the African Development Bank's 2025 Economic Outlook specifically notes these systems stay remarkably robust.
Wow.
Well, they're often surprisingly insulated from external shocks, things like global financial market volatility or even major events like oil price swings tied to, say, the 2024-2025 Middle East conflicts.
Because they're local and trust-based.
Precisely. That resilience comes from their localized, trust-based nature. Direct accountability kind of replaces complex legal stuff. So the actionable insight here for you, if you're looking to engage, is that businesses can find success by offering tools that enhance these systems.
Enhance, not replace.
Exactly. Maybe provide more transparency or security, but without trying to disrupt that underlying community trust, which is, their bedrock.
Okay, so it's clear these systems are powerful on their own. A real testament to grassroots innovation. But the big question for many businesses, startups, investors is, how do you actually engage? Respectfully, effectively? How do you connect with this established, trust-based ecosystem to unlock even more potential?
Right. How do you bridge that gap?
Yeah, if these systems are so potent, so resilient, how can the formal economy connect with this massive, dynamic, informal market?
Well, the sources are actually quite clear on this. Mobile money is consistently identified as a primary sort of foundational enabler.
Mobile money, okay.
Makes sense. Yeah, the World Bank's 2023 Digital Africa report gives a stark example. It shows a significant 15% account ownership growth in countries like Ghana between 2017 and 2022. And that growth was specifically driven by mobile money spreading.
So it's creating pathways.
It is. It's not just about sending money. It's about creating digital financial identities, transaction histories, where formal banking often falls short.
And fintech's role?
Oh, huge. Fintech companies have a massive, potentially transformative role here. They can develop user-friendly apps, right? Apps that digitize contributions for esusu or tontines, streamlining the process, offering more transparency, secure record-keeping.
But crucially,
preserving that foundational community trust. Imagine an app that helps a esusu group track contributions and payouts automatically. It reduces disputes, cuts down admin burden, actually strengthening the system, not undermining it.
Right, working with the existing structure.
Exactly. And retailers, too, they can step in with innovative strategies. Remember that global fintechs survey? It highlighted lack of formal documentation affecting 45% of unbanked adults.
Nearly half. That's a huge barrier.
It is. Nearly half can't even open a basic bank account. So retailers can introduce microcredit or, pay later models right at the point of sale. They can leverage existing community relationships or alternative ways to assess creditworthiness.
Like the local shopkeeper knowing who's reliable.
Precisely. A trusted local shop might offer credit to regulars who are part of an esusu group based on their community standing, not a formal credit score.
Okay. And this isn't just a local thing.
No, and this is often overlooked. The sources point to a truly global opportunity. Diaspora communities, US, Europe, they're actively using similar informal financial systems.
Really? Like susu groups abroad?
Yeah. A 2024 Bloomberg report notes Ghanaian susu groups in the UK manage millions annually, pooling funds for investments or sending support back home.
Wow.
So tailored financial products that can bridge these local and diaspora markets that would significantly amplify reach and impact for businesses. Think seamless transfers, investments that respect those existing trust networks.
It connects back to culture then.
Definitely. It's recognizing that financial behavior is deeply cultural, and it transcends borders.
It certainly sounds like a massive opportunity, potentially global in scope, something that could really reshape market strategies.
Yeah.
But every market, especially one so dynamic and, let's face it, historically underserved, it has challenges.
Always.
What risks do businesses, investors, what do they need to be really aware of when engaging here? According to the sources, what are the potential pitfalls? We need the full picture.
Absolutely. And the landscape isn't without its formidable challenges. The sources highlight some key macroeconomic and geopolitical risks that definitely need careful navigation.
Like what?
Okay, for instance, Nigeria's 23.7% inflation rate back in April 2025, reported by the IMF. That poses a significant threat.
How does inflation hit these systems?
Well, think about it. People contribute regularly to a communal pot, right? Rapid inflation can just erode the purchasing power of those pooled funds very quickly.
So the money's worth less when it's your turn.
Exactly. Imagine contributing what you can, only for its real value to drop significantly before you access it. That creates immense financial strain. It can test the trust these systems rely on, potentially leading to disputes, maybe even system collapse if it's not managed carefully.
Okay, that's a big one.
And coupled with this, you have things like food insecurity. If that affects, say, 8% of the population in a country like Nigeria, that also strains informal systems.
Because people struggle to contribute.
Right. When basic needs like food get more expensive or harder to find, people's ability to make consistent contributions or repay informal loans is severely impacted. That puts pressure on the whole network because one member's struggle affects the communal fund.
It's all interconnected.
It is. And then there are broader geopolitical risks, things like potential U.S. aid reductions flagged by the Atlantic Council in 2025. That could limit external support and development funds that indirectly help stabilize economies, both formal and informal.
So even if the systems are resilient.
Right. Even though they're resilient, a cut in broader economic support can indirectly increase reliance on these local networks, maybe overloading them or forcing them to operate under even greater strain, especially if they're also supporting vulnerable people who might otherwise get aid. These are real, tangible challenges.
Okay, so those are significant headwinds, certainly, not to be underestimated. But acknowledging these challenges, what does this all mean for the future? Despite these real difficulties, where are the clear, undeniable opportunities the sources point to? Where's the bright path forward?
Well, despite those challenges, the opportunities are indeed significant, and they're pretty clearly laid out across the sources. Take Nigeria's bold 2024 reforms, those subsidy cuts, the currency liberalization. According to the IMF, that's already spurred considerable investor interest.
Creating a better climate.
Exactly. It's creating a more favorable climate for private sector growth, opening doors for innovative solutions.
And for fintechs and retailers.
The sheer market size remains incredibly compelling, and it's largely untapped. They can offer affordable, tech-enabled solutions, think simple, intuitive mobile apps for esusu, or localized micro-lending models. They can capture a market where 464 million people technically remain in poverty, yet are actively driving these powerful, informal economies.
That's the key insight, isn't it? They're active economic agents.
That's it, precisely. They are not passive recipients of aid. They are resourceful economic agents, managing their finances with real ingenuity. The core message across all these sources is just undeniable. Africa's unbanked population powers a $20 billion informal credit economy. That's a powerful testament to their financial resilience and resourcefulness. It's almost a blueprint for decentralized, trust-based finance.
A $20 billion blueprint.
Yeah. And looking ahead, the World Bank projects sub-Saharan Africa's growth at a robust 4.2% by 2026. So this isn't just a resilient market, it's a growing one, brimming with potential for those willing to engage thoughtfully, respectfully.
So what we've really seen today is this powerful redefinition of unbanked. It's shifted from being about a lack of capacity to revealing these diverse, incredibly resilient, community-driven financial systems. Systems that aren't just surviving, they're thriving. And they seem ripe for respectful innovation.
Absolutely.
So based on this wealth of source material we've looked at today, the call to action for you listening, whether you're in business, a startup, retail, an investor, it seems crystal clear.
What is it?
Act now. Partner with these communities, leverage mobile tech thoughtfully and crucially, build products that genuinely amplify the inherent strengths of these remarkable systems. Don't try to supplant them.
That's key. Amplify, don't replace.
It feels like it's not just good business, it's truly impactful development.
I agree. This deep dive really redefines financial inclusion. It's not about charity, not a handout, but about profound empowerment, unlocking potential that's already there.
Right.
It firmly positions Africa's unbanked as, well, the next exciting frontier for global fintech innovation and truly inclusive economic development.
A frontier of opportunity.
Definitely. And maybe a final thought to leave you with. If the strength of these informal, trust-based systems is so immense, so deeply ingrained, what vital lessons can established financial institutions globally, even in the most developed economies, learn from them?
Interesting question. Learn about what?
About fostering true resilience, building genuine community, achieving deeper financial inclusion that goes beyond just opening bank accounts. It's a question that could, maybe reshape the future of finance everywhere.
A lot to think about there. That's all the deep diving we have for you today on the weekly Stay Wired recap from all of us here at WeWire.
We hope this exploration into your sources has given you a whole new, invigorating perspective.
Yeah, new perspective on Africa's vibrant informal economies. It's time.
Stay Wired Weekly Recap was produced by WeWire,
a B2B company, bridging the banking gap between emerging markets and the world.
Tune in same time next week for the Stay Wired Weekly Recap.